Welcome to this tutorial on using Seasonax Event Studies. Now in this video I'm going to show you how to trade market moving events using historical data from Federal Reserve meetings, ECB meetings, through to elections, and even events like Treasury auctions or even sad events like plane crashes. Seasonax helps you understand how markets typically react to these events, and that can give you a very powerful timing advantage. So why do event studies matter? Well, every major event leaves a historical price footprint. Markets rarely react randomly, they tend to follow patterns. So Seasonax's event studies reveal these patterns so you can see how markets behave before or after the event and how they reacted afterwards, how long the impact usually lasted. And when you open an event study chart like I have here, what you're going to see is a simple but really powerful chart, and here's how to read it. First of all, you look at the x-axis along the bottom. So in this instance, we're looking at the euro dollar, and we're choosing the German Bundestag elections. Okay, so that's our event we're going to look at. And the x-axis along the bottom shows you the trading days before and after the event. So this is the 3 trading days before the event. This is the 3 trading days after the event. And if you want to find the actual day of the event, you just go here, and that will be the day of the actual election result. Now, once you have the x-axis sorted, you want to know what the y-axis shows you. And that shows you the percentage returns. It gives you the read on whether the market tends to rise or fall around the event. Right? So anything above 100 is showing the market's rising, and below 100 is showing the market is falling. And then finally, the event curve, which you see along the bottom, just shows you the average historical reaction. And you also have a significant explanation of the data. So the events that you can look at in Seasonax are really quite varied. You can look at macro events. You can look at Federal Reserve meetings, Bank of England meetings, ECB, Bank of Japan, central bank meetings. There's a whole range of reports out of the US, Non-Farm Payrolls, CPI, retail sales, crude oil inventories, very helpful things to look at. You've also got the, that helpful sector events like the crude oil inventories. And there's even unusual events. If you look here, miscellaneous, things like Super Bowl wins, full moon, lunar eclipses, solar eclipses. And this is with those major commercial airline accidents are listed. And when you click on an event, what Seasonax will do will give you a detailed statistic. So look at the euro dollar. Let's look at the euro dollar for the non-farm payrolls, for instance. Here's non-farm payrolls. And here we see the reactions to the euro dollar over the last, we want to look at the reaction over the last 5 years. And let's say we want to see actually what tends to happen on the day of the non-farm payrolls. And here you see, right? The average return is 0.0%. And this shows you the typical move after the event. But you've also got the median return, which is helpful because it removes outliers and gives you a more stable picture. You then got the percentage of positive and negative reactions. So in this instance, it's 49.15% positive winning trades. In other words, the euro dollar gains. And that just tells you how often the event moved the market and in which direction. Was it higher or lower? You've also very helpfully, which I really like, is the maximum gain and maximum loss. Now this helps you understand the full range of outcomes. So there's a maximum 2.17% gain here, and a maximum 1.27% loss here. You've also got these metrics which are really helpful. Standard deviation, that just shows you how volatile the reaction's been. The lower standard deviation means consistent behavior. Higher standard deviation means unpredictable reactions. Sharpe ratio, again, this measures risk-adjusted performance, and a high Sharpe ratio means the event reaction has been reliable and smooth. A low or negative Sharpe ratio means the reaction has been sort of inconsistent or weak. So you can see here this has been a very choppy reaction. Now, what event studies do is they just help you make better decisions around major news events. And here are the common ways to use it. Should you hold a position into event or reduce exposure? If you look at non-farm payrolls here, you can see, okay, look, there's a tendency like for the euro dollar to gain in the couple of days after the non-farm payroll. Does the main move happen after the announcement, or is it before the announcement? Is it on the day? What about leading into non-farm payrolls? What about going out of non-farm payrolls? How large is the usual reaction? When there is a reaction on the day, how long does it last? And what Seasonax does, it answers all of these questions. It converts uncertainty into clear historical probability. So Seasonax Event Studies allow you to trade major news events with confidence. You can see the historical direction, the magnitude of the move, the consistency of the move, and the risk. And you can use these insights to time entries, exits, and manage risk around major market events. Thanks for watching this tutorial. Remember, don't just trade it, Seasonax it.